Welcome, everybody. We are doing building a startup budget today with Mike Sandman from SCORE Boston. He's a veteran mentor that has a lot of experience in this area and a lot of great information to share with you on this very important topic. But as we get going, if you are not familiar with SCORE, we'd like to make sure that you are. So there are three important things that SCORE does. One is offering or sharing of business information through different methods, such as from our website, you can download templates on not just for a business plan, but for a marketing plan or a budget or cash flow statement or all kinds of different templates. So I strongly encourage you to check those out. Those are on the score.org website under the library section. There are also lots of other resources such as blogs and articles and previously recorded webinars and lots of information. So it's really a great resource for you. Of course, we offer our workshops and webinars. You can find a list of those that Boston is offering on the website. We also send out a newsletter a couple times a week, giving you a list of all the webinars and offered within the district, which would be Massachusetts and Rhode Island. The most important thing that SCORE does, however, is the mentoring. Our mentors are volunteers, and they come to us from a wide variety of backgrounds. They have different skill sets that they are looking to share with the small business community. We're working with the folks that are trying to decide if small business ownership is right for them. And we're working with those that are in that planning phase. And we're working with those that already have a business. Folks are coming to us for many different reasons, whether it's growing their business or working on that business plan or trying to figure out how to keep their budget working for them. Many different topics. And certainly if we can't find a mentor within our own chapter, we will reach out to the district and the national database to find somebody that can help you. Our mentors work as a team. So a beginning session, a mentor, you're going to meet with probably just one mentor. They're going to want to learn about you, what your goals are, what your challenges are, and they're going to work on putting together a plan to overcome the challenges and help you achieve your goals. If there's anything that they are not an expert in, they will reach back to the group. And so you're really getting the brain power of the group as a whole to help you achieve what you want to achieve. So I strongly encourage you, if you do not have a SCORE mentor, to get a SCORE mentor. And that's very easy to do. You can go to the score.org website, put your little zip code into the blue box, and it will match you to the chapter that's nearest you. And then they'll ask you a couple of questions, and that information will be used to help make sure you are scheduled with the mentor that's best to assist you, or at least get things started. So we are using the Q&A button today for questions that you want asked to the presenter, and I'd like you to ask you to do that. Everything else can go into chat, but if you're putting questions into chat, sometimes they can get missed because the chat keeps rolling. So it's really much easier for me to pull out those questions for our presenter out of the Q&A. And we are recording. And from that little graphic there, you can see, you can go to the score.org/Boston website. And on the blue bar, there's local workshops, and under there is previously recorded webinars, and this webinar will be listed. Give me about 24 to 48 hours to make that happen, but that will be how that works. So I'm going to go ahead and pull down my share, and I'm going to turn it over to you, Mike. It's all yours. And you're on mute, just so you know.
Right, there we go. Thanks very much, Teresa. Okay, so what we're going to do is walk through how to build a startup budget today. And this is, I think, particularly helpful for somebody who's trying to figure out how to get started. But even if you're in business, this is an important thing to do, to build a projection of what your cash needs are going to be and what your budget is going to be. So it has dual purpose or multi-purpose, and please feel free to ask questions as we go along. We're going to go through a number of sort of steps here and build this up gradually because it can be a complicated topic if you try and take it on all at once. First of all, a couple of definitions. We're going to talk about money. Revenue or sales is what customers or clients pay, and net revenue or sales is what's left after returns or allowances. And sometimes people will say, well, what's my income or something of that sort? Um, Income comes at the very end. All right. Revenue is what we're talking about at the top line. As I say, what people pay you for the services or products that you supply to them. Expenses or costs are what you pay to run the business. Startup costs, equipment that you need, build out that you need if you have a storefront or a place of business, legal expenses, website development, all of those sorts of things. Those are startup costs. They occur typically once at the beginning when you're starting up a business. And usually there's some ongoing maintenance costs that will be involved in whether it's keeping up equipment or updating your website. But the startup costs are a sort of a blob of money that you need at the beginning. And it's very important to figure out what those are going to be and have the cash in place to cover them. Fixed expenses are things like rent, web hosting services, insurance, phone. They're called fixed because they continue whether you sell anything or not, whether revenue goes up or down. And variable expenses are labor, including your labor. It's really important to include your own labor costs in this. Otherwise, you won't be budgeting for the money that you need to live on. Parts and supplies, inventory, they're called variable because they pretty much go up and down depending on revenue, although your labor is in many ways a fixed cost. Profit is what's left over after all the expenses are paid, or income. Profit or income means the same thing, but it comes at the very bottom of the financial statement. And so I want to make sure that everybody has the same, understands these terms in the same framework. Okay, why bother with this? What are we doing? Why bother with the startup or even an ongoing budget projection? It helps you figure out whether the business will enable you to reach your personal income goals. That's what we're all in to do. That's why we're in business in the first place. It helps you figure out how much money you'll need to start up or to expand, gives you an understanding of the financial risks and the rewards, identifies the development and startup costs separately from the ongoing expenses, something that's, especially when you're starting, is very important. And if you're going outside to get some money from family, from a nonprofit lender, from a bank, it's information that they require, or they should require. Sometimes family doesn't, but if you can be sure that if you're going to any sort of outside lender, they're going to want to see this sort of projection. And it provides a plan to help guide your decisions and especially to monitor your results. So how am I doing? I put this plan together. Is it working? Do I have to make some changes in my planning? And some common concerns that people have when you think about a financial, if you just were to download the financial projections template, you'd say, these are complicated. I don't know if I can do this on my own. I don't understand all the figures and the math. It's overwhelming. Can I start my business without a financial projection model? Well, yeah, you can if you want to take a huge risk, but you really can do this, and SCORE mentors can help you. And the way we're going to go through this is one sort of slice at a time. So you don't have to do the whole thing at once, and you'll see how these pieces relate to one another. These slices relate. So we're going to use Anne's nursery as an example. And we're doing that because Anne's nursery is a little bit more complicated than some businesses. She needs a place of business. She actually needs a place to raise trees, shrubs, and the plants that she's going to be selling. And she's looking to get to, this is her objective, is to get to $700,000 and some change in her third year sales. And she sells to florists and consumers. So she has two different approaches. Florists obviously have customers themselves, and consumers are direct. So Anne is going to be selling two different channels to get her revenue. And we're going to use a budget projection template that works in Excel, but it also works in Google Sheets and in Apple's Numbers product. And the first 6 worksheets are required startup funds, salaries and wages, fixed operating expenses, the projected sales forecast, and we have 2 pieces of that, and then cash receipts and disbursements. And the score, as I say, the score templates that you can download will work in any of the spreadsheet applications that you might be comfortable with. So let's look at startup funds. In this case, for a plant nursery, you have to have some land, a place to raise these products. You probably need a building on the land, a shed of some sort. You have to do some leasehold improvements if you're leasing space and equipment, furniture and fixtures, vehicles for delivery, a van for delivery, probably a secondhand van, and maybe there's some other expenses. But we've added up for Ann's projections $172,000 worth of startup expenses. And she needs some operating capital. So she didn't have to pay a lot in pre-opening salaries and wages, but she's got some insurance premiums that she'll have to pay in advance. She has to bring in inventory. She'll have some legal and accounting fees. Again, not a very big number, but it's something to think about. She's actually buying property here. She doesn't have to make a rent deposit, but she has a utility deposit and some supplies and do some advertising and promotions. Doesn't need any licenses. And she needs some cash on hand to just get started. So we think that she'll need about $41,800 in cash, in operating capital, in addition to the $172,000 she needs for the fixed assets. And we'll talk about, in a minute, we'll talk about where she's going to get that. But altogether, to do this, she needs $213,800. And maybe it's really 215 or 200, but this is a good ballpark number for her to do her planning with. Different types of businesses require different startup expenses. So think about how much you need. Where will it come from? What will it be used for? And you have to be sure to include starting inventory and labor costs, salaries, taxes, benefits, all part of labor costs, before you make the first sale. There are going to be some expenses. And that's a really important concept to make sure you understand, is you need some money ahead of time in order to get into business. Okay. Let's look at the labor costs, including her own labor costs and labor-related taxes. So she wants to pay herself $25 an hour, $50,000 to get started, and she's looking for more than that ultimately. But okay, that's what she's willing to do at the beginning to tighten her belt, and that means she's going to pay herself $43.33 a month. She's going to need 3 full-time employees in her nursery and her packaging things up and delivery and so forth. And she's estimating that it'll cost her $17.50 an hour plus benefits for those people. So she needs $9,100 a month in cash available to get them going. And she's not going to have any part-time employees or independent contractors at the beginning, but in total, she's got 80 hours a week for at the very beginning, but although she's going to have 3 employees, so actually that 80 hours a week, it needs to go up by another 80 hours. And she's got $13,433 worth of payroll right at the beginning for just wages. So the thing that is really important to remember is there are taxes and benefits for people that you have to pay and have to budget for, and that's down here in this next section. So we have Social Security, which is 6.2%, and Medicare, and the federal unemployment tax and state unemployment tax. And these will vary depending on the state that you're in. If you're in Rhode Island, it's going to be different than in Massachusetts, but these are pretty good numbers. She's going to offer an employee, not a pension program, but a match for 401k. And she's got workers' compensation to pay and employee health insurance to pay, but she doesn't have to pay employee health insurance. She's too small for that right now. Um, but those lines need to be in there, thinking about the future. So altogether, she's got $1,500 a month worth of benefits, and it all comes out to almost $15,000 in salary and related expenses. It's very important to remember the benefits cost. And just as an aside, it's really helpful to go to a payroll processing company that will calculate all this stuff for you and file all of the necessary returns. You have to make sure, however, that you have the money in the bank that they can draw from. So these are the labor expenses that she's going to start with. Now let's look at the operating expenses. Sorry, let me go back to that. The template that you can download from us is going to give you these slices, and this is labor is one of these first slices. And so you fill this one out first, and some of the information that is that you need to know, the Social Security rates and so forth, should be in that template when you start it up. Okay, so let's continue with the operating expenses, both fixed and variable. She figures that starting off in January, she's going to do $900 worth of advertising, and she's got car and truck expenses. She doesn't have any commissions or fees. We have some categories in here that will apply to some businesses, but not all. And you can see the insurance costs that she's got and office expenses and the various and sundry other kinds of things, so that she's got $4,300 worth of expenses right from the beginning, before she's got much in the way of sales, in addition to the employee expenses. And again, she is an employee and she's part of those employee expenses. So we'll wait and take a look at that. When you get this template for yourself and you're filling it in, if there's an expense line that you need to add for your own business because it's a particular kind of business that we're not covering here, put it in, no problem. There should be probably an other in here as a line for everybody. Okay, the next thing we're going to talk about is sales and sales projections. When you're starting a business, it takes time to get that first sale and more time to build sales volume. So somebody will say, well, I'm going to start, whether it's a tree nursery or a pizza restaurant, I'm going to start off and my revenue is going to be X number of dollars a month. Remember that at the beginning, you're not going to have that revenue. So we're going to plan this out, do a projection month by month to get a reasonable estimate of how fast we can build up our sales. She has three categories of sales. She has direct sales to retailers. Yes, there's a question in the chat here. We will send this out to attendees, and the deck will be available as well.
I actually attached it into chat, and I'll do it again if you in case you joined after I attached it, but yeah, I'll put it back in chat. But I do have a question, if you wouldn't mind
Sure.
going back to the template.
Yeah.
Why is insurance in startup and in the monthly operating expenses?
There's a payment to get insurance. When you start with your policy, there may be a premium that you have to pay right at the beginning. It's put in here as an ongoing expense as well. It may not be the case that you need it in the first year. It depends again on the type of business that you have. But good question.
Thank you.
All right.
Mhm.
And any other questions? If you see anomalies, anybody who sees an anomaly in here and you say, well, how come that's in there or how come that's not in here? Please let us know. If I have an answer, I'll give it to you. And if I don't, I will say that. Okay. So Anne has three categories of sales. She's going to have direct to local retailers. That's the florists. She's going to get some representatives to go out more broadly to sell to more distant retailers that aren't right in the local area. And she's going to sell to consumers through internet-based sales. She's not going to have a florist shop herself. She's not going to try to compete with the florist shops that are her customers. but she'll have a website where people can buy plants and she'll figure out how to ship them. And in fact, there are some online nurseries that have really gotten to um, national success in an outfit called White Flower Farms that will ship, and there are others that will ship around the company on their websites, and they've pretty much gone all internet based. But let's go back to that first column. It takes time to get that first sale and more time to build sales volume. So you have to be realistic. How do you figure out how much time it takes? Ask people who work in the same sort of business and build a month by month sales projection. And that's what we're going to do. And sometimes people will say, how do I ask somebody who's been in this business, what they think that I'm going to compete with them? Well, you can ask somebody who's outside the geographic area, and we're going to talk about joining trade associations and so forth. So there are ways to get to people who are in that business. The best thing you can possibly do is have worked in it ahead of time yourself, so you'll see from experience what it takes. Okay, so think about sales units. What categories make sense for your selling for your business? Are you selling products? Are you selling services by the hour or by the day or on a fixed price basis? Some combination of both. You have to think about what makes up your unit of sale, and then we're going to look at your cost per unit of sale and your price per unit of sale. So thinking about the unit of sale is really important. In the case of a tree nursery, well, the unit of sale is probably a plant, whether it's a tree or a shrub. That's what Ann is selling. And she has a mix of products. So she has bags of plants that if she's selling a plant mix, she's got the unit of sale is bags, and she's expecting by the end of the year to have sold 125 of these, but she's not going to sell 12 a month in January. She's just going to sell 6, she figures. And her bags are relatively expensive. But she's hoping to get $250,000 worth of sales out of these bags of plants. But in January, again, she's only going to get $11,000, um, uh, not 20,000 or 22,000. She's not going to divide that number by 12 in January. And her cost of goods is what it costs her to buy the product and then perhaps do something with it, whether she's planting it in the ground and letting it grow or repackaging it or whatever. But it's going to be $6,000 of that sales is going to be taken up with costs of goods. So her total margin is $4,950. That's not her profit. That's what's left over before her operating expenses. That's the product that she's bringing in, the direct cost taken off of her sales. And that's really important to remember that there's going to be some expenses after she's paid for those products. Now, if you're not selling a product directly, but selling a service, it's the labor cost of the service that is effectively the same as cost of goods sold. But the main point is there are expenses beyond that product cost. And here they are. Each product line has its own cost and its own margin and its own seasonality. So we put this together for a projection for her. She's got that plant mix at $2,000 per bag. She's got a website, a much smaller bag that she's selling for $100. And she's got distant nurseries that she's going to sell to through her commissioned salespeople. And it's a little bit different combination there. But each one of them has a cost, has a sales price per unit, has a cost per unit, and a margin per unit. And that's what we're going to use in this sales projection. And each one of them has a different scale up. Starting in January, we've got 5 bags here in January instead of 6, but February pretty much flat. People are just beginning to think about buying these products, and and she herself is just getting her advertising out. And her peak business is going to be May, June, July, maybe less in July because people go on vacation, picking back up in August and September, and then it tails off. And her hope is that she'll have her projection is that she'll have 125, and that's more than a hope. Actually, it is a projection based on what she knows about the sales curve for this product. So she takes that, she multiplies it by the price, $2,000 per bag, and that's her revenue, her total sales for each month as she goes along for that getting to that $250,000. And the cost of goods sold, and therefore the margin fall out of that. Now, it's really important to remember that she should be looking at this month by month to see how she's doing. But this is a projection, and this is where she's going to go with take the projection that she's developing for a lender if she's getting some money, and we'll take a look at where that money might come from. For the plant mix that she's selling over the internet, it's the same thing, but it's going to take, she figures it's going to take 4 months before she has any internet sales at all. She's going to generate some internet traffic and figure out how to do that and work with a web designer. So that's going to take a little while. And that too has a seasonality. And she thinks like this is going to build up to November will be a peak. And then she'll have $57,000 worth of total sales. And that's her cost of goods sold. And $22,800 will be left for operating expenses. And the plant mix for distant nurseries, she's got commission that she's going to have to pay here for, or she's got people selling on commission for her reps, and she recognizes that that's going to take even longer, and it'll really be the end of the year before she begins to generate any significant sales at all. And so that's the sales for that product line. And when you add it all up, her total sales are going to look like this line here is the total of all three product lines. And she's hoping to hit $347,000 or projecting that she'll hit $347,000 for the end of the year. And there's her cost of goods sold, $195,000, and her total operating margin is $151,000. So let me stop there and see if we have any questions and make sure that people have a chance to look at this and absorb it. There's a lot here.
Yes, can you briefly tell how a service business would use the same?
Sure. So if you have different services, again, it's just like having different products. And you might have a different price and a different cost for each service, but it's the same situation. If you're starting off selling a service, there's a beginning and it takes a while to get going. And you would say, well, okay, I'm going to sell X number of hours or X number of days of my service in January, and maybe a little bit more in February and a little bit more in March. But whatever it is, there is that curve. Takes a while to build it up. And the kind of service that you're selling will tell you whether there's a seasonality to it. So certainly for a plant nursery, there is a seasonality. For some kinds of products, maybe not. For snow shovels, there's a very different seasonality than there is for gardening trowels. So think about the same how that would apply for your services as well. If you're doing snow plowing, very clearly you're going to wait till the snow flies. And if you're doing landscaping, it's the height of the season is when the weather is warm, which by the way is why a lot of people who do landscaping turn around and do snow plowing in the wintertime, because they've got a vehicle, they put a plow on it, they've got some labor that they can keep going, and it's a good mix. So I hope that that's an answer to the question about services. An online service business is an interesting one. I need to know a little bit more about what kind of service you might be thinking of selling online. Maybe you can put that into the chat and we can come back to that.
I have another question in
Yeah.
the Q&A tab. What about factoring in a CAGR into IRR, and where are CAGRs factored in? Would this be within the tablature?
So we're talking about something that comes out of financial statements. Let me take a look at this. Hmm. Well, you're talking internal rate of return. Um, Rates of return are what the rate of return on your invested capital. And that really comes out of um, the P&L and the balance sheet, well, P&L in particular. So that's not a cash flow projection. That's something that falls out of the actual business operations. I hope that's helpful. We do have workshops on on financial statements that would help you calculate that. Okay. When you make a chart like this monthly, it's very labor intensive if you have dozens of products. Yeah, good question. Um, you might categorize group your products and do an average, so that it's not necessarily automated, but it's simpler. For example, if you're a store that carries a lot of uh, a lot of individual products, a lot of individual SKUs, you can certainly group them by category. You don't have to have every shirt and every pair of trousers separately. You can have shirts and trousers, and that would be true for a lot of retail storefronts, or for that matter, online businesses. Categorizing them is perfectly fine. But again, categorizing like for like, and you do want to have a different projection for each broad category because they will have different costs and different prices per unit. Okay, let's just take another look at this and make sure that everybody gets what we're doing. We're breaking down the products into different categories or different classes here, and doing a revenue projection, a sales projection for each one, and the costs for each one are individual to that product or category. So the margin for each one is individual as well. And we come up with the totals for our sales and total costs, and therefore our total operating margin. And now we're going to see what happens with that total operating margin as we go through the various costs that are related to operations. Okay. Some sources of information about unit cost and price. Well, you get that from suppliers. You can learn from competitors by talking with some of those competitors. Again, we'll get to how we do that. Um, you get estimates from news reports, from work in the industry, from observing competitors. Joining a trade association is a really good idea because trade associations keep broad data on what's typical for the industry, and you can estimate the sales volume needed to make the business profitable from looking at talking to, for example, a banker who loans money for this particular kind of business because they will have access to industry information for this particular kind of business. And you can get some help at the Kirstein section of the Boston Public Library, the business library. There are reference librarians there who can be very, very helpful in pointing you to the right trade association and pointing you to financial and information and reports from a particular segment of an industry. So there are ways to get this. It takes a little bit of homework. It's not a huge problem, but go to the business section of the Boston Public Library and talk to the reference librarians there, and they can sort of flesh out what's here on this list. Um, okay. Some other inputs that you have to think about. How do you collect money? Do you get paid everything right up front through a credit card, as you would if you were running a totally online business? Do your customers pay you within 60 days, within 30 days? Do you have bad debts? Um, you have to think about that in terms of your cash flow. When you get your money in is different than when you send the product out in some kinds of businesses. And in other businesses, no, when you send you get paid right when you send it out. So what kind of business are you in? If Ann is selling by credit card to consumers, she's getting paid right away. If she's selling to florists, the florist may say, well, I'm used to working on credit. I'll pay you within typically 30 to 60 days. In some cases, people will take more than 60 days. So again, what kind of business are you in? What's typical for your customers? You have to add that up and it should equal 100%. And the same with your payments. If you're able to buy on credit as opposed to being able to buy on a credit card payment, have to pay right away. You have accounts payable, and maybe you pay typically between 30 and 60 days. So on average, you have an opportunity to wait a little while for the collection to come in before you have to pay for the product. It depends on the business that you're in as to whether that would be the case. And again, it's a spreadsheet that you have to think about. Just whatever the industry or the business segment that you're in will have its own typical pattern of payments and receipts. Okay, funding. Where do I get my money? Okay, so Anne has owner's equity. She has $115,000 that she has put together to begin with. And she's going to take a commercial loan of $33,000 and a commercial mortgage. And how does that work? How come she can get it? She's bankable right at the beginning. Well, she's getting land. She's buying land. You remember way back here when we did the startup expenses? Let's see if we can take another look at that. There we go. She's got land, and the land is mortgageable. She can get a mortgage on the land because the bank knows that, well, if I give her some of the money that's needed to buy that land, worst case, I'll be able to get my money back by selling that land at some point in the future if she fails to make her payments. What the bank wants to know is, can I get my money back? It's really important for the bank, and that's the basis on which they'll give a loan if there's something concrete there that or land or building, they'll be more comfortable. Here we go. Be more comfortable loaning than the bank will if there's no collateral at all. So she's got some money herself. She's got some land that she can pledge. She's going to get a vehicle for $20,000, and she's going to get a $15,000 car loan on that. And she's going to pay a loan rate. And that's true of the credit card debt that she's going to have, and hopefully she'll never use that. And the mortgage, commercial mortgage, and the commercial loan, those are the interest rates that we put in here. When you get this spreadsheet, put in the loan rate that you would face if you're going to borrow money. So we said that she needed $213,000 to get started, and these are the pieces that make that up. Very often, if you're starting a small business, a storefront, or something of that sort, then it's family and friends who are going to be the outside investors in your business. And you may not have a lot of money yourself, but you need to figure out what you need to get off the ground and then figure out where you're going to get it. For an existing business, this is the bucket of cash plus receivables that will be turned into cash, minus the payables that will go out. So this is kind of what's in the bank or going to be in the bank at the beginning of the year. And so we have this piece here for existing businesses only, calculating the cash that you have on hand. And this is what you will start off with at the beginning of the year. Okay, take a look at that. Let's go to the next one. So the next thing is, okay, let's put this is the projection, the cash flow projection that we've been talking about. I'm going to take all these pieces and put them together. So we've said that Anne's going to need $41,800 of cash on hand at the very beginning. That's part of her startup expenses. And she's going to get cash receipts in of $10,000 from that 5 bags worth of sales that she's going to have. And here are her sales projections that flow over from the sales projection sheet that we did previously. Whoops, sorry. There we go. So these all flow in from what we've already done. That's her cash receipts, and that's the total cash that she's got um, for each month. So she starts off with $41,800, gets $10,000 in. She's got $51,800 to work with at in the end of January. But then we have to take expenses out of that. So she's got labor right here, and that's the first piece. So that's true for each month all the way across. And you can see the labor piece, and is a constant all the way through. Um, and this is the labor staff that she's building up to. And these are the taxes and insurance that fall out of that spreadsheet. So let's go to the next one. Oh, let's wait here. Okay, we'll take a look at this. Make sure it makes sense to people. This all comes from what we've already done previously. So you don't have to re-enter this. This will flow in the spread in the template that we'll make available. Okay, now we have all of the operating expenses that we talked about. And those are pretty much fixed all the way across. So you can see she's got $4,300 worth of operating expenses in addition to the labor cost that she has, and of course the cost of goods sold. And then she's got some other expenses. She has her commercial loan and commercial mortgage based on the interest rates and the vehicle loan. And she's got a line of credit with the bank that she's going to begin paying back on in February. So all of her expenses add up to $18,511, but she only had, what, $10,000 coming in, right? So at the end, she's got less cash than she has at the beginning. And here's where this thing really is very important. This cash projection is very important because you can see that during the first 3 months, her cash goes down. And she started with $40,000, gets all the way down to about $16,000 before it just begins to bottom out and start to build up again. And that's because she's just getting this business off the ground, and it's a seasonal business. So she doesn't begin to see a lot of money coming in, a lot of sales coming in until the height of the season anyway. And then she builds up pretty well. Okay. Are there standard recommendation percentages for taxes, expenses, paying yourself, and so forth? Well, taxes, yeah. So we're talking about employment taxes, Social Security, unemployment insurance, that sort of thing. Those are fixed percentages determined by law. Okay. What for income taxes? Well, it depends on what you get with the income that you're drawing out at the end of the year. Like how much profit is there? You're paying a tax based on the profit. With most small businesses, if you have a limited liability corporation or a sole proprietorship or an S corporation, you're going to pay taxes as an individual on the profit that the business generates. So that's accounting for tax is a whole separate thing. But remember, this is sort of like doing this on your own. This is your income at the end of the year, and you'll pay an income tax based on that income. And on the budget's product or service-based businesses, well, really, the template that you can use it works for both. So I hope that's clear. We talked about the same sort of the analogies with service. What kind of service are you selling? How fast does it build up sales? When do you get paid for those services? I worked as a management consultant for 25 years in a company, and we typically would start to get paid about halfway through our project. So we needed a fair amount of capital to even get going on the projects, and that capital had been built up over years of selling our services. And if you're selling other kinds of things that are paid much more quickly, you don't need that initial capital. We've identified $41,800 worth of cash that Anne needs in order to get started. And again, her cash balance goes down as she's getting off the ground. So I want to make sure that we understand the flow through that occurs here. And let's go back and take a look at that. So that $41,000 came from here, from the operating capital that she needs beyond the fixed assets that she's acquiring before she gets started. She needed $213,800. She already spent $172,000 of that, and she ends up with $41,800 in the bank just to get off the ground. So let's go back to where we were. Here we are. Okay. So this is the cash that she has at the end of each month, and we can see that she builds up pretty well. And she'll take some money out of that for herself at the end of the year and leave some in the business to hopefully expand. Okay, so that's the total projection, and in some ways it would be better, but the numbers would be absolutely minuscule if we did put them all on a single slide. So you have to imagine how these things build one after the other. So let's go back and just take a look at how those slides build up. So that's the first level. Payroll and taxes come out. The operating expenses come out. Some other expenses come out of here related to the loans that she's taken. And that's how much cash she has at the end. Okay, so we've spent 45 minutes going through this process of building this up. Why do we do this anyway? Well, it helps you figure out whether the business will enable you to reach your goal. So what does Anne want out of this? She wants income, and by the end of the year, she begins to generate pretty good income, cash that she can actually take out of the business for herself. We figured out how much money she needed to get started or expand. She needed over $200,000 between the the assets that she needed to acquire and the cash that she needed at the beginning. Even if she doesn't have to acquire any assets at all, when you're starting a business, you need some cash in the bank in order to get going. You need to pay for the website development or the product, the inventory, or whatever it is that you need in order to sort of start in business. It gives a funder, whether it's family or a lender or whatever, the information they require. And in this case, this projection shows the bank that, yeah, she's going to make some money at the end of the year. She can adhere to these projections. And it gives you a sense of the risks. So at one point, that $41,000 that she has dwindles down to $15,000. She has to begin to build that up fairly soon. Otherwise, she's going to have a cash flow crunch later on. So those are the risks that she's taking. And it identifies the development startup cost that she needs and gives her a plan. And she can use that plan to help guide her decisions and monitor the results. So month by month, she should be looking at both the sales that are coming in and seeing if they're matching up and at the projections. And she can go back and change. You can go back and change these numbers to give you actuals as each month goes by. And that will all flow through. So you'll see what's going to happen to you by the end of the year. Okay, that's why to go through all of this. Questions? What have we got for questions that we haven't answered yet?
Yeah, I am starting a nonprofit. Any recommendations to adjust these forms for that, or does SCORE offer a different set of financial forms for a nonprofit?
Okay, so the difference between what you need to do for a nonprofit and what you need to do for profit, when it comes to financial startup projections, there really aren't any differences. With a nonprofit, you have some startup expenses going on. You have labor once you get started. It takes a while before you get the grants that you will hope, or the donations that you will hopefully bring in order to get that nonprofit going. So I think you can use this pretty well, even for a nonprofit. There are some differences for nonprofits, and we actually have some folks who do mentoring of nonprofits in particular to help figure out where the money's going to come from, how to bring in donations and grants. Um,
Um,
Go ahead.
does SCORE operate in all states?
Yes,
Yes, we do.
yes, indeed. All over the United States, including Alaska and Hawaii. So once you start a business in Denver, there will be a SCORE chapter in Denver that can help him with mentors who can help your son walk through exactly the same process. And
Um,
when do you cut your losses if your business expenses outweigh your business income? Well, hopefully you'll see at the beginning that you're not going to make it unless you have more capital in. Um, and you won't get started unless you're pretty comfortable that you'll be able to succeed. Um,
and
but
I want to, oh, go ahead.
if that's not the case and you get down the road 6 months and you see that the projections just didn't working out, you have to think about, well, okay, how do I wrap this up without losing more money? Go ahead, Teresa. You were going to say
Well,
something.
I was just going to say, a SCORE mentor can sit and go through your budget specific to your business, go through it with you and help you look at the numbers and make sure that what you're looking at is realistic. They can get into the nitty gritty for your situation. And it's really a really great exercise to go through with someone else that's outside of your business.
Yeah. So let me say I went through a budget for a childcare facility, and there were a couple of really significant mistakes in the budget that the person had put together. It vastly overestimated the amount of rent that they were going to have to pay, but they'd made some other errors in there. They really needed to be corrected to give them a realistic look. And this is somebody who had not operated a child care facility before, but they'd identified a need in the community for it. And when we got done, there was a much more realistic budget that showed where the money would have to come from and how much money would be needed to start up. So it's a matter of getting somebody has some experience to help you, and that's what SCORE mentors can do. These spreadsheets, this whole template works pretty well for yourself, but work on it yourself and then go to a mentor and make sure, have I done this the right way? Because there may be some questions that you haven't asked yourself. And anything else?
I do not have anything else. So
Okay,
I
go
guess
ahead.
we'll go ahead and wrap things up today.
All right,
Um,
great.
Thanks, Mike, for sharing all that information. I did want to let you know that Mike's going to be giving another presentation about, I think it's February 21st,
Yep.
on financial different financial reports and things. So I definitely encourage you to watch our newsletter. We'll get that posted soon. Let's see, we got another, okay, we just got thank yous coming through. So thanks everybody. And we hope to see you at our next webinar.
Okay, bye-bye.